All right, let's talk about something huge that's happening right now, almost under the radar. There's a quiet revolution going on, and it's centered on the world's safest asset, US Treasuries. Today, we're going to break down how this absolute cornerstone of the financial system is getting a massive tech upgrade through tokenization. And believe me, it's a fundamental shift you'll want to get your head around.
So, let's just start with a number that gets everyone's attention. $7.3 billion. That's the size of the tokenized US Treasury market right now in 2025. And get this, that's a 256% jump in just 1 year. That's not just growth, that is an explosion. It tells you one thing very clearly. The big players, the institutions, they're all in.
But, this isn't just about a big number on a slide. What we're really seeing here is a radical tech upgrade to, well, the bedrock of the entire global financial system. And the really critical part? Look at who's driving this. It's not some niche crypto startup. We're talking about the titans of finance, BlackRock, Fidelity. They're not just experimenting, they're building what they see as the essential financial plumbing of the future.
Okay, so you're probably hearing this term tokenizing a treasury and wondering, what on earth is that? Let's dive in and break down exactly what it is and, maybe more importantly, how it actually works.
Think about it like this. Normally, when you buy a treasury bond, you just see a line in your brokerage account, right? With tokenization, you're actually holding a digital token, a cryptographic proof on a blockchain that says, hey, I own this. So you're getting that same risk-free yield and safety of government debt, but now it's supercharged with the efficiency and global reach of a digital asset.
And how do you get a traditional treasury onto the blockchain? Well, it's actually a pretty logical process. First, you take actual US treasuries and park them with a trusted custodian. Then you create digital tokens on a blockchain that represent pieces of those real-world assets. Now here's where it gets really cool. The compliance stuff, verifying customers, anti-money laundering rules, they get baked right into the token itself using something called a smart contract. From there, the tokens can be traded, and those same smart contracts just automatically handle all the boring stuff, like paying out interest and the final redemption. It's all automated.
And this is where you really see the why behind all this. The old way? Your trade takes 2 days to settle, it's stuck in 9 to 5 business hours, and the record keeping is, let's just say, complex. The new way, settlement is instant, trading is 24/7, 365 all around the globe, and you have a perfect, unchangeable audit trail on the blockchain. It's just a night and day difference in efficiency.
So, with that kind of efficiency on the table, it's no surprise it kicked off what you could call an institutional gold rush. Let's take a look at the timeline, because it really shows how this went from a tiny experiment to a core strategy for Wall Street.
So things were already moving back in 2021, with Franklin Templeton breaking new ground. But the real earthquake hit in March of 2024, when BlackRock, the world's largest asset manager, jumps into the game with their buoyed fund. That's not just a small ripple. That's a massive signal to the entire financial world that this isn't a test anymore. This is the future.
And the effect? Wow. It was immediate. In just over a year, BlackRock's fund just gobbled up nearly a third of the entire market, soaring past $2.3 billion in assets. It just goes to show you what happens when a name with that much trust behind it gets involved. It doesn't just grow a market, it supercharges it.
Okay, but this kind of explosive growth is never a one-sided story. It brings up a really critical debate. On one hand, you have these incredible benefits, but on the other, regulators are, understandably, raising some red flags about significant new risks. So let's be fair and look at both sides of this coin.
So first, the good stuff, the promise. 24/7 global trading, lower costs, total transparency, those are huge wins. But maybe the real game changer here is this idea of programmable yield. What does that mean? It means you can code rules directly into the asset. Imagine automatically reinvesting your interest payments or shifting funds when market conditions change, all without lifting a finger. That's the kind of stuff that's incredibly difficult to do with today's financial plumbing.
All right, now for the other side, the peril. And these risks are very real. You've got the classic tech worries like bugs in the code or cybersecurity hacks. The regulatory landscape is still being built, but there's also a deeper, more systemic fear. What if there's a panic? What if a massive wave of people try to redeem their tokens all at once, forcing a fire sale of the actual treasuries underneath? That could cause some serious problems.
And look, this isn't just me or some analyst speculating. This is a direct warning from the US Federal Reserve. They've basically said that if this gets big enough, It could act as a bridge, letting volatility from the often wild crypto markets spill over into the super stable treasury market. That's a financial stability concern that has their full attention.
So, when you weigh all that, the huge potential and the serious risks, where does that leave us? What's the outlook here? Are we really on the verge of reshaping global finance as we know it? Well, the potential scale is just mind-boggling. We're at 7.3 billion today, right? A recent analysis from McKinsey projects that the total market for all tokenized assets could hit somewhere between $2 and $4 trillion by 2030. To give you a sense of that number, that's about the size of Germany's entire economy. And you can bet that tokenized treasuries are going to be a huge piece of that pie. And that really brings us to the big final question. When you take the safest, most trusted asset on the planet and you fuse it with this incredibly powerful new technology, what are you creating? Are we looking at the literal building blocks for a whole new financial system? It seems like this quiet revolution, well, it's not so quiet anymore.
Something to think about as this all unfolds. Of course, this has all been for informational purposes. This is not financial advice.